All right, we are live a whole 4 minutes early. So I got all my extra stuff done. So having a before 12 o'clock drink. So cheers. Oh, let's see. So before people start jumping in here, I wanted to take a look at a couple of comments, questions that people had that were been pretty common. It's going well, Stone. Thank you. It's been a really good week, actually. So 3 weeks ago, I hurt my back really bad, and so that's been like ongoing for a couple weeks. Now that's good. My regular job's all caught up. It was a great week in the stock market, really fun with the big dip, and we turned out to be a profitable week, even though Monday was down, I think 23,000 or something at one point. So that's pretty good. How are you? Oh, managing leaps. So I don't know if you guys have any leaps. I'm sure quite a few do. And ooh, we're up $6 today. Yes. Dang, is that the crypto? Managing leaps. So we had one. We have the Snapchat. Wow, $3,000. This is what this thing is worth now. Amazing. So managing leaps real quick. So there's a few different ways you can deal with these, but I just wanted to go over with them. I think I just replied in the comment. I think yeah, maybe it was you, H Mons. But this is one that we purchased for $1,770, and there's always the obvious thing you can do by closing these things out. Let's see, we'll go out to where this one, I think it was, is this a January? Yes, it is. So a January. So a couple different things we could do here to be able to manage these things, kind of take profits, secure some profits. So $1,700, right? So we could buy, or we could sell this one, excuse me. So we'd sell the $3,000, collect our $3,000 back, and then depending on how much we collected, we could buy one further out of the money, right? We could buy back an 85, we could buy back a 75, and collect $800 worth of those profits. We could obviously close it. Or what I chose to do, I chose to sell the 75, which at the time I think I collected a couple grand. So it basically turned it into a debit spread, and that's what I did here. So I netted out, I believe I originally sold this for $1,900 or $2,000. I remember collecting about $200 for it. But now what it turned into is a debit spread. So I mean, Snap is way up there right now, but as long as it stays above 75, not only did I get my money back, not only did I collect $200 cash, but I'm also able to collect another $1,500 as long as it stays above $75. January 2023, if it goes up more, I could probably close the positions. And I mean, like right now, I sell this one, buy this one. I'm still collecting $700. The farther it goes up and the longer we go, the more we'll be able to collect on this. So that's what I choose to do. But there's many ways to do it. I mean, you could have just sold it out. Maybe you could do something better with that $2,000 or whatever I sold it for. Just having the equity. What's up, Velocity? Nice wrench. Stone, what's your questions about put credit spreads? That might be something I know a little bit about. Yeah, I was like, well, you're here pretty much every week. I've talked to you, pretty cool guy. And like, since we had a couple trolls, I think it was actually the week, I don't know, the week you were here, or maybe like last week. I was like, I need somebody to be able to just get rid of them. All right, you have one expiring in January. Oh, this is probably, but thank you in advance. So your Leaps is expiring in January, and then Stone, whatever, let me know what your questions are on put credit spreads, and we can go over those too. Boy, I wonder if I'm up 662. I wonder if my, must be the crypto that's up. No. Today's return? No. In case you guys didn't know, I put in an order for $3 a day of Doge, Bitcoin, and Ethereum on this account. So might as well average into some of that. I didn't want to spend a whole lot of money on it because I have a lot of Ethereum and Bitcoin that I've had for years and years and years and years, but I might as well stick some in this. And my girlfriend's super into Doge, which she's actually very far up from, but she considers herself very down on since it did hit that high of 70. All right. So I've been seeing your videos on Tesla credit spreads, and I was wondering, how do you pick your strike prices? Like, do you check the chart? I think I told you I trade 90 put credit spreads Monday through Friday, and I trade based off support. Yeah, so I guess because I look at it 50 times a day, I don't really need to look at the chart. So I guess essentially I do look at the chart because it's all pretty much mentally there for me. I mean, not exactly, but I know where we've been. I know where it seems to bounce off of. I know what news we had. I know how it affected it. So so in this case, and a lot of it is just literally, I wouldn't say gut feeling, but my feeling based on what's been happening recently. So like we can zoom out to the 180 day, and of course we can see this big wedge, and then like we know when there was, I know this dip was a NITS investigation when that news came out. I know when things were sympathetic to the whole market. I know when things were sympathetic to China, and how all those things, like how I digest them, it might be different than how the overall market perceives it. Like a NITS investigation to me was nothing. So like that dip there, that didn't affect me very much. That was just like a free give me dip, like 100%. That one was a free dip to me. I knew it was coming right back up. I mean, not right back up, but within a week, that I was very highly confident in, because it wasn't anything that changed the business model like at all whatsoever. So that was easy, right? And then I think at that time I was like, oh man, I can collect like so much premium for selling like 600s right now. Like I'll just sell them. And then as we're getting like higher, I think we should have a little bit of a pullback. I'm kind of actually hoping that we do. I think this might be like a little bit over, but since I've been following it step by step all along the way, I feel like last time, I guess we can go back to the longer chart, like over here, this was scary territory for me. If you happen to go back to any of these videos and you look anywhere when it was busting above like 700, 800, and I would say it in my videos, like I would open these up and they're scary. Like, this is scary high to me. But now I think we've had a few more earnings. We've seen the growth. We've seen the progress. So now I think like the 730s, 750s, that's where I think it's pretty fair. Like, I think it's still undervalued. I still think 775 is super cheap for Tesla, where it's going to be in the next coming years. But that's pretty much it, right? And of course I have to pay attention to the overall market, because the overall market coming down can affect it as well. So I don't have an ABC 1 2 3, like follow these steps and this is how. Like, I don't just come in here and see support based on technicals. I see support of like for a drop. I don't really care how far down that NHTSA drop went. Anything there is a great deal, and I see it bouncing back. $90 put credit spreads Monday through Friday. That's awesome. And trade-off support. So what I mean by support is I pick my strike price below the support. Yeah, I mean, that's what you have to do, right? That's what we're all doing. We're all just, I mean, at the end of the day, it's a guess. You can use technicals, you can use gut feeling, you can use whatever, you can use standard deviations, Bollinger Bands, whatever you want. But we're all just trying to find a place where it's not going to go below. And I was opening up the put credit spreads like in this coming January. I was doing that 6 months ago because I knew it was going to be above 700. Like, that in my mind. You can go back and look at what I've said, but just like overall, there was no doubt in my mind Tesla like is not going to end up the year below 700, even when it was super downtrending and we were hitting, I don't even know what that low was, like 540s or something like that. I thought that was ridiculously cheap. And overall, we're on a nice uptrend. Ziva was a lead gapper on Friday on the volume. Then at 6:58 a.m. had a huge green volume bar right before TD opened. Who was behind the sudden push in volume? No idea. I don't even know what ZIVO is. Oh, good Lord, who knows? With a with a biotech, who knows? Did they? Oh, that's a big chart. That's why. And no news. So. Company specific, no. I don't know. Could be. I would maybe look at insider buying too. I don't know. Chief Executive Andrew Dahl in August issued a letter to the company stockholders saying that after years of stopgap funding and on and off research and development, the company has found itself in its strongest financial position ever and a portfolio with great promise and prospects. That's it. Who knows? That's pretty cool though. I mean, that's a pretty nice gap. Maybe just the sweeps on something too. Let's see. Oh, my Palantir leaps expire in January. Was debating what price to exit. Yeah, I don't know. I can't tell you that just because, like, for me, Palantir is still undervalued at the price. Ooh. If I had to mix, I do have a $30. I have a $30 call expiring in January on Palantir. I don't know. Like, no shame, no regrets in taking profits ever though. Like, just look for one of those monster spikes and get rid of it. Like when you have a spike up and you have that implied volatility, if you're not wanting to execute it and hold on to the shares long term, that's when I would get rid of it. Every single dip SPY had last 3 times, I'd be down 1,000 and I'd close out of a bunch of spreads. Then this last drop was down 4K, and I didn't close any or touch any. I opened more, and now I'm back up. Yeah, well, and I think that's 100% what's going to happen. The more and more that you see it, right? Because I always think of it like the first time you break up with the girlfriend or whatever, like when you're super young and your first relationship goes sour, and you're like, oh no, it's the end of the world, and your heart just sinks, and you think you can't live anymore. And then you go through a few more breakups, and that's what losing that money is like. That's the same feeling that I have like when I lost a whole bunch of money in the beginning. And then you start seeing it as opportunity. You're just like, this happens. I break up with chicks, and maybe I find a better one. And that's kind of what happens. Like, you're down, you open up some more positions. You're like, this is just opportunity, and you end up on it. So yeah, I think that's one of the huge things. And one of the other things I've been thinking about really is the whole stock market is just pattern recognition. And so when you're new and your view of like a pattern is just like this, right? Like you just see, oh, it's up. So because we're creatures that recognize patterns, it's just going up. It must continue to be up. And then the longer you trade, the more that you kind of like zoom out and you see what overall trends do. You see when something spikes up, it usually does have a pullback, if not right then, pretty short. If it has a huge dip, you see it come back up. And that's what comes with experience. And that's how I think we just become better and better traders. Open up put credit spreads on Facebook and Nvidia when they sold off. Is Facebook done selling off? I know they were just like down. So maybe in the last couple days you did. Cool. Yeah, it's nice. The only thing that sucks is like when there's another huge leg down, but I think that's pretty solid. Do you let your credit spreads expire? Because I'm planning on trading SPY Monday, Wednesday, and Friday, then Iron Condor it and let it expire. Do you think that's a good idea? I think it is. I think it is a good idea to try out all sorts of different strategies, and then do them for a little while. Don't use your whole bankroll on them. Set yourself up some rules. And I think the rules are going to be hard to figure out really initially, because you don't know your initial tolerance for the volatility. And you can also, of course, just paper trade. But I would do it, see how you like it. There's certain, like there's 1,000 strategies out there. Maybe not 1,000, but there's a lot of strategies that people use over and over again. And people fall into stuff that they're comfortable with. And once you're comfortable with it and you've done it 10, 20, 30 times, you know how everything reacts, you know how to manage it. See if it's for you. I mean, try it like I do. I've been doing that on the SPX for the last just few weeks now. They're really fun. So, I mean, which is similar to the SPY, the Iron Condors. I've been doing the SPX Iron Condors. They're really fun, but they take active management. Like you have to be pretty much sitting in front of it or access to it to be able to close it if things go against you wherever your price is that you're going to close it at. So that's the drawback of it. That's the part I don't like. What I do like about it is all the action, right? Like literally within 5 minutes I can be down a few hundred, up a few hundred, and it's just really fast. With a small amount of money too. I mean, on my Robinhood account, when I'm down a couple thousand, I mean that can be a tick or two. But when I'm playing the SPX, since I just started doing it, I might have 1,000 or 5,000 on it, and so that's relatively small compared to the Robinhood amount that I play with. And but those moves, they're pretty quick. And then towards that end of the day, when you see all that theta decaying, that's pretty cool too. It's all pretty neat. So try it. And oh, do I let my credit? Oh, I'm sorry, I missed that. Do I let my credit spreads expire? Yes, no. Sometimes. On it depends. Like it depends what it is. If it's something that's super far out of the money, and it's not something that I want to open up a new position on, or I don't need the collateral to open up a new position at that point, like if there's nothing that I see that I want to do, yeah, I can just let it ride out and expire. If it's anywhere close to the money, no, I'm closing that out early, or rolling it, because I don't want to take the risk of the last day, 2, 3, or something, it moving totally against me and turning a almost winner into a loser. But the majority, like ideally, if I was to tell you what to do, what you should do, it's opening them up 4 to 6 weeks out, closing them, within a couple weeks of expiration. That way you still have extrinsic value. The big advantage of closing or rolling with a few weeks left is you have extrinsic value, which is huge. You still have money to play with if you're waiting till the last few days, and that's the big risk with the SPY or SPX, 0 DTs, 1 DTs, or whatever like that. You just, if things move against you quickly, you don't have any extrinsic value. Like your play will go from a value of a few $100s down to $2 like instantly. Imagine doing put credit spreads on biotech. Yep. Yeah, they're just not. I mean, most of them are penny stocks, unless you're talking about, like, I don't know, some of the bigger ones. But yeah, no, not for me. I mean, I would totally, like, if it was one that I put time into, and there are people that literally all they do is biotech guys. I remember I used to watch a guy's YouTube video, and he was super into the biotechs. Like, he knew when FDA approval might come. He knew it all. And that's, like, that was his niche. And we can all have a niche. It's so cool. Like, some people might just know oil futures, or or whatever. Okay, it's funny because that's how it actually is the first. Girlfriend always breaks hearts. Yes, 100%. Like, I think those two things correlate like perfectly. Breaking up with a girlfriend and your first big loss, like lose half your account, and yeah, it's depressing. It was down to the point where I saw it being irrational. Yeah, I have 10,000. I have 10K and thinking about buying 5K SPY spreads. Monday expire Wednesday, then let that expire them. The other 5 for Friday. Do you think that's a good idea? I would just start smaller. Like if you have a 10K bankroll, I mean, start with 2,000. There's no rush. The market is not going to disappear. Your opportunity is not going to disappear. As a matter of fact, there will probably be like huge opportunities coming up. So until you've done them for a little while, I would not spend half of my bankroll, half of my account on something that you're just starting to do. And I don't know that you're just starting to do it, but that's what I'm kind of gathering here. So no way would I put half of my account on one play, just like straight out the beginning. I would make sure you're comfortable with it. I mean, like people that were playing it, that huge dip that we had Monday, like, man, that bent over a lot of people. And then even the rip that we had. Just start slow, man. You have a lot of time. Thanks a lot. I'll look at the prices on Monday and compare it for a long debit spread. Cool. But I tried that strategy on a few where when the market drops to do your put credit spreads closer, so when it's back up, you'll be more. Okay. I'm not sure which one that is. Like on the SPYs, or let's see, one of those weeks. Let's see, but I tried that strategy on a few where when the market drops to do your put credit spreads closer, so when it's back up. Oh, yes. Yeah, exactly. And the reason is that's kind of counterintuitive too, right? So when the underlying drops, the reason I go closer to the money is because I think I've seen the drop. So like, and I probably didn't explain that very well, but when I see Tesla drop, like, and it's down here, I think that's, and then I see it like aftermarket, it's like, this is where it's going to be. It's not going to be in free fall land. There's no reason for it. It's the market's digested the news and that's what it spit out at me. So as opposed to some other news that might be, I don't know what would be just completely altering for Tesla, but as long as that news has been digested, everybody knows about it, especially when there's been 2 days, because I think there's people who react right away to the news, and then people who see the news and may have the reaction the next day, maybe hedge fund managers or something like that. Then I think that's the best time, because the one thing I can't really predict is like overall market conditions and everything just kind of coming down. But when I see that strong bounce with news going on, that's why I feel more comfortable. So cool. I don't recommend putting put credit spreads on SPY from Monday for a Wednesday expiration, since SPY can move against you. And I never let my put credit spreads expire unless you have very out of the money strike price. Yeah, unless I'm doing like 0 or 1 DTE, I wouldn't let him either. I saw Steven in the Discord. He's up $1,000 each time. I wanted to ask how much collateral he's using. I think he's using, I want to say like 15,000 or so right now in his Tastyworks. I'm doing 95% chance of profit. Cool. But remember, 5% chance of losing. There and it'll happen. That 5% will happen. It'll only be 1 out of 20, so it won't feel like very often, but it will happen. But I love when the VIX goes super high, when you can have extra cash, so much opportunity to make it back quick. Yes. Yeah, isn't that like, it's so funny that like initially it's all scary, and then when you're at where you're at, when you realize, okay, VIX is high, I'm collecting more premium, and then I could recognize what the reaction should be, how well you can do. I always go place my put credit spreads on Tuesday, so you just do like the 1 DTEs. $8 out of the money. So you like get Monday out of the way for any crazy over the weekend volatility. Play it for Wednesday. You should have people join the stream and ask questions and let us share a screen. Yeah, actually I did that. I did that a couple weeks ago. I'd be happy to do it again. I think it kind of I think it was pretty decent. But I also noticed like at the same time I was pretty much ignoring what people were saying in chat, so I really didn't get to address what I wanted to. But if you have something specific that you want to go over that you think would be helpful for a bunch of people, we could definitely connect. Just do a Zoom call. You could go over it all, and that way I could just post it, and people could like just walk through it. And I mean, that'd be a super good review. I'm good with that. Anything to help people out, like, and for someone who does those same plays all the time, when you absolutely master them, I think that's a huge benefit to everybody. Oh, I missed this. Jason, one of these weeks you could show your Tastyworks and how you set up your SPX plays in there. Yeah, I probably should. I mean, they're super straightforward. I do it in the mobile app and just use the whatchamacallit. Yeah, the mobile app, Iron Condor, and then I'll usually play backed up against 2 standard deviations. But I'm also like doing that in between trading on Robinhood, usually recording something every single day, and then my regular job. So like one more thing to the list, like I would love to actually post every single play in the Discord or post it on Instagram or whatever. I think that would be super cool, but in reality I don't have time for that. I'd like to post, I'd like to go through like my dividend account, which has been pretty good. There's a whole bunch of stuff. I just need more time, that's all. Just let me quit my job one day. Wonder how the rates will affect everything. Yeah. Yep. I don't know. Crystal ball broken. Wait, so you could sell a call for the same... Wait, you would sell a call for the same expiration in January, correct? Yeah, if I wanted to take money out. So, yeah, if you're talking about... And then you're switching into a debit spread. I mean, we could look at the ones I have. Let's go look at my Palantirs. So, do I have an expiring? Oh wait, no, I have them like in. Here's some of them that we have expiring, right? So we paid $646 for these 4 contracts, and these expire June. So if I go take a look at these, the Junes. And so right now what I could do is I could just sell the calls, these $25 calls, and I collect $40 a piece. So that's all of my 100% of my initial investment back, right? All $646. Plus I collect an extra $40 cash. And then plus, as long as Palantir stays above $25, I can still collect another $500 when these in June. So that's one of the ways. I mean, or I could sell it up here. I could sell it for $460, grab most of my collateral or most of my money back. I'd still be down $200, but I'd have a maximum upside of $1,000 per debit spread. So yes, hopefully that makes sense to you. Just legging into a debit spread, and sometimes you get to make it free just because the value of this has gone from $646 to almost $1,000. I could sell it, collect my $400, or if I have patience, collect my money back, use it for another play, and still have upside. That is one of my favorite plays, one of my favorite ways to deal with some of these leaps ever, because you still have upside. You have zero risk at that point. Like selling these 25s, I would mitigate all my risk. I'm positive $40, so even if it goes down to $3, I've still made $40. And there's just like no risk on it, right? And then there's also still gains to be made of $500 if it happens to expire above $25, which I think in this case is highly likely. For me, the reason I'm not doing it on Palantir though is because I want to buy these shares. So I think it'll still go up. That's my feeling. But either which way, I'm happy to own. I want to own 1,000 shares of Palantir. That was my goal from the beginning. Some of those I bought as shares. I stopped averaging in on those because since I purchased these for $600, that makes my average price about $26. So since Palantir is above $26 right now, I'm not purchasing anymore. But I have my 6 leaps to make up for the other shares that we have. I think, where is it at? What's my average? Oh, my average cost $24 right now. So, and we have 484 shares of it. So hopefully that all makes sense. And it just depends, like what your goal is. If it was just to make money off of it, yeah, that's, I think, a great way to deal with it. But for me, the reason I have those $20 calls is I just simply want the shares. That's it. I see you've been playing like straddles or strangles on earnings. I did the one on Nike. That was it. Not too much else. And that one I closed out. Yeah, I think I posted that. I closed it out before actual earnings, which was good. So we made, I can't even remember what the percentage was on it, just from the IV spike. I think we got, it was like 20 or 30% on that play, and didn't actually even play earnings. Closed it out right before. I closed it out like 30 minutes before market closed, and we're up quite a bit on it just because the price of those, both the puts and the calls went up. Actually, no, the puts stayed the same. Calls went up though, because I think Nike was up. Man, Nike got beat up though. Holy smokes. I'm not sure if they bounced back or not though. Wow. Yeah, that was a huge dip. Yeah, I would have lost on that because I think my put was at 147, but I closed it out for $77. And how is their, I didn't even see how they're, oh, it's just slightly above, but they probably guided lower is what I would imagine, because I think most of their stuff is all manufactured in China. Put credit spreads on Nikes? I don't know. I mean, obviously I know what Nike is, but I don't know the company very well. I don't know if this is temporary bad news. And then like anecdotally, I think I've bought like most all of my sneakers have always been Nike, except for this last like 6 months or year. So that's like totally anecdotal, and that's like that, but you know, my experience is kind of like how I view the world, and maybe if I'm not buying so many Nikes anymore, maybe other people aren't as much. I don't know. But there's probably a lot to know about China. I mean, they're worldwide, and they have manufacturing all over the place. So, oh, and the premium was weird. Was it right after the drop that the premium was weird? I mean, I could see. What can we grab on these? Yeah. End of the month. Yeah, I mean, I would do 40, 135, $50. I don't think that's terrible. 135, you can still grab 30s. I mean, it's pretty much seen its dip, I think. I don't think it'll have. And what was the last day looking like? Get some actual candles. Yeah, I think that'd be pretty solid. Oh, you were looking at call credit spreads? And they're always gonna look weird after hours. And Stone, let me see. Can we, nope, no message there. Stone, is there something that you want to, like, you think you'd be able to put something together? We can walk through kind of what your SPY put credit SPY strategy is. unless you took off. Stream looks like pretty little weak. Oh. Gotcha. All right. What else do we need to talk about? You know, oh. Let's see. I'm jealous you're getting this. Yeah, that Cybertruck will be super cool, I think. We'll just have to wait till next year. I can't wait. And my solar panels, too. They keep sending me a text like a few times a week saying, we're working on it, we're working on it. I think they're just gonna be everywhere pretty soon. Oh, one thing I was thinking about too. I don't know if it's like a terrible idea or a decent idea or not. I watch some other people's videos because I want to see other people's opinions on, especially like stocks that I'm very bullish or very bearish on. Namely like Neo right now, Alibaba, like all the Chinese stocks. So I've been watching some videos done by other people, like and their reasoning behind buying them, and I think some of the reasoning is so dang bad. But I was thinking about like actually reviewing reviewing some of the reasons for people being bullish on those, and I think some of them are just like garbage. And if people are listening to some of it, I think it's just a terrible idea. But I was thinking about doing that, just kind of like a commentary on some other stuff. I was just trying to ask you a question like live and me sharing screen. You want it? Let's see. You want to share your screen? Let's see. I think we can do it. What do we have to do? I think we have to go to Zoom. See if we can figure it out. Dun, dun. Let's see. New meeting. I was going to buy some AMHC because it rhymes with AMC. Bad idea. No, it's the monkey throwing out the dart at the dartboard. You probably buying stuff like that would probably be great. Like I was thinking about that. Could you make a little portfolio of just like cool name stocks like Love, and like I have, you know, Cedar Fair is fun, and Spirit, and just like names like that. Maybe Hood. You'd probably, on average, you'd probably be good. Let's see. Participants. How do we invite? All right, let's see. Can I send it? Nope. Okay. Let's see. See if this will work, Stone. As long as you're the only one that jumps on it, then you should be able to. Plus, it's a recent D-SPAC play, which has been the hottest play in the market over the last 3 weeks. Stone, are you Raul? Is that you? Then I realized, like, eventually this person has to be right, but if I listen to that, then I'll never invest. Yeah, I think we have to have our own ideas. Oh, wait, let's see. If you're there, I need to, I think, unmute my desktop audio. Okay. Are you there? Or maybe share, let's see, share screen. Start video. Obviously, I can't start video. You should be unmuted. I don't know what else I need to do here. Ask to start video? I don't know. We'll see if this goes okay. Let me know if you're in there or if it's in fact you. I don't know, Raul. I don't need to start my video, do I? I don't think I can, because I'm streaming over here. Oh, I'm not... Okay, I didn't read the first part. Yeah, I'm not a fan of the perma bear YouTubers always trying to scare people because I'll have their post pop up on my algo, and then I look at their YouTube, and it's the next crash. God, next crash is always coming. Well, the one I was actually watching was some hey,
Jason.
There we go. All right, do we got the right guy? Is this Stone?
Yeah.
Okay, cool.
So I'm trying to share my screen, but it won't let me.
Let's see. What does it say?
It says host disabled participant screen sharing.
Okay. Multiple participants. Okay. Now what does it do? Now
there you go. Yeah.
Okay, cool.
Okay, I'm trying to share my. Okay. Can you see?
Yep.
Alright, so I had a question.
I could see it. Now it just went wacko. I don't know if that's mine or yours. Okay, there we go. Yep, we're back.
Alright, so I had a question for like Spy right here. So
yeah.
Okay, so my trades. Okay, so I had a put credit spread on Friday. So I placed it on Thursday. Going to yesterday, so Friday, and it's this. I think it's this one. Oh yeah, so I had placed the trade, the put credit spread for 438. And my bottom leg 37, right? And so when Spy opened, it was at 441, I think, like 441. But like, let's say like Spy would have gone below my strike prices, both of them.
Yeah.
Like how would you have saved that? Like how would you have saved? Or you just like close it, or were you just like
when it's like
roll that?
Yeah, really you should have and you should kind of already know where you want to stop out at, like as far as how far underwater you want to be before you'd close it. And especially since you don't have much time, right? Like if it happened to dip below there quickly, all your extrinsic value is gone, your intrinsic value is gone, so that thing will be just, I mean, it'll be worth nothing like super quick.
Yeah.
So
yeah, because I had my resistance at 50. I mean my support at the 50 AMA, which was 141, right? But like when it opened up, it was like already below it. So like I didn't know what to do. So, like, I was trying to like look at like whether I should roll it or like how do I close it, or what should I even do?
I mean everybody has different ways of dealing with it. I can tell you like the most common way is closing it at two or three times the credit received. So like for example 270, you would like as soon as you're down 540, just close it out, and that's what almost everybody does, or 2 or 3 times. Just like whatever that is, that's when you need to stop and yeah, not trying to recover it or anything like that. And I think that's pretty solid for what I've seen from people doing it, because they'll lose 1 out of 10 or 15. So I think it's pretty solid.
Yeah, because right when market opened, I was already down like $600, and I received for 50. So I was like, okay, I think I'm gonna close and just take the loss plus the like $100.
Yeah.
For my own money.
Yeah.
But I think I gotta say, I think I just got lucky because price just went up. And
yes,
so I actually profited off. I got 270 off it.
Yeah, I think the problem is like long term. How long have you been doing it?
Like I already have like a month doing this.
A month.
Like,
okay. Yeah, I think like obviously we're gonna definitely 100% get lucky, like, you know, quite a few times. But like in the long term, I think having that stop and stopping out at the same place every single time would end up netting you something better. Just long term, just so you have something in place that you follow by the book. Like most people, when they follow their own strategy, they'll do better than kind of following their gut. But also the fact that you have a put credit spread. I mean, I don't know how much value was left in them, but those, personally, I'd probably look to roll out quite a ways if I could. Just, you know, like zoom out to the 1 year or the 5 year or whatever. I mean, SPY's going up eventually.
Yeah.
But that's when I'm playing them. When I play the SPXs, I stop out. Like I'll have, if I collected $150, I'm stopping out at 450, even if it's on open the next day. I'll close it. I just want to follow like what I've I guess the rules that I set for myself, instead of kind of like hoping, and like hoping is not a strategy, praying is not a strategy. Just follow your own rules. Because even if you would have stopped out there, let's say like you closed it and you took it would have been a 600. You said you were down like 600.
Yeah, like I think like 630.
So 630 total. So it would have cost you like 1,080 to close.
Yeah, something like that.
Okay, so like overall, even if you were to take that loss at that point, would you have been up on your spreads overall?
Yeah, overall, yeah, all my spreads that I've done, yeah.
Nice, yeah. I think that's pretty good. Because the last thing you want to do is hope for it to come back and all your collateral's gone. Like that's the worst, especially when you see, like, you know, when we're kind of seeing our mindsets of like we want to see what we want to see, right? We see the dead cat bounce, but all we see is a bounce, like, oh, it's going in the right direction. And I think that can fool us to the bad side more often than not. So just to follow your own rules or whatever you put in place. I know a month is a decent amount of time, but I think long term you're just gonna have to follow whatever rules you have in place. Do you have anything, like, what are you just riding them out till expiration every time, or?
Well, I just, so for SPY, for Robinhood, like if you try to like, so I have these, right, the 448. I have these put credit spreads for this week. They end September 30th. So let's say I want to close it, so I got 6 of them, right? But since Robinhood, like, they just won't let you close it at 0.1.
Yes.
Yeah, so I close them at 0.2, but I take out my profits, and that's what I wait for. Like, since so I could close them at 2. And like most of the time, I do it. Like, I actually close them at that, and I don't let mine expire. So I close mine at 0.2, 2 cents. Cool. And I actually get all the profit. Like,
so what about on the other side? So like, what if it goes just totally against you? Do you just take the loss, like 100%, or?
Well, I just wait for my support, because I have my TD Ameritrade. Like, so I have all my supports, my EMAs, my SMA, and all that, and so I wait for it to see if there's a bounce. But if it doesn't, I just sell it right away.
Gotcha. So you're just like super confident that kind of no matter what happens, they're bouncing back and you're gonna win for the day?
Yeah, I kind of like check the, like, what do you call it, the momentum of the, like, if it's going up or if it's just trading sideways or if it's going down. Like if it's going down, like the momentum, like this, what was it, like past 2 weeks, I actually collected like 6,000 just on put credit spreads. Like, because I saw it going down. Now it's putting call credit spreads, and I actually collected like 6,000. But yeah, like later on when it like was it Monday this week, it just went like super down.
Yeah.
And so, but I had a call credit spread, so like going from Friday to Monday, so I actually like if it got filled right away, right when market opened, because it opened up super super down.
Yeah.
And then I started doing call credit spreads. I mean put credit spreads, because I saw like the next day, Monday, Tuesday, like it was already going up.
Yep.
And I still profited. But yesterday, like the Thursday one going to Friday, like that, I was kind of scared because like on Friday it opened up really low.
Yeah. Yeah, I think like even though you have like everything kind of in place for them all to be winners, I think you're gonna have to, you need an exit strategy, especially like when you're building up your account. Like you're gonna be, I don't know how many are you opening them? You're like, what is it, 4 of them? How wide are your? Oh, okay, so you're just playing $400, right? $600. And then like as you gain money, are you just opening up more and more, or what are you doing with your?
No, I wait for them to, because I kind of put down all my collateral. So
Okay.
like let's say, okay, wait, can you see my screen?
Yep.
Okay, so let's say I usually put them like 8 points apart. So
Yep.
so this would be 1, 2, 3, 4, 5. So 437, right?
Okay.
This is what I usually do. I open up a credit spread like this. So I only get 5 cents. So I put 90 though, because I have 10,000 buying power. So I do that, and I collect the 360.
And then so when you collect that 360, are you opening up another one? Or
No, I just wait. I just wait till like I collect it, I close it, and profit that. Then I
I'm
open
saying
up
like
a new one.
when you grow your account, like okay, right now you have 10,000. What about like in a month when you have 12,000, 13, 14,000? Are you gonna
It's
use it all?
because the thing I'm doing right now is like, so I'm using only 9,000. Well, I use 9,000 right for collateral, but then I leave 1,000, so in case if it goes bad like against me, I have money to close it out. But right now, like I'm not. So the money that I'm making right now, I'm kind of putting it like into SPY,
Oh, beautiful.
Apple,
Beautiful.
and QQQs.
Okay.
So all of this I made this week, I think.
Yeah.
So this week I already got 10 shares. I already got 10 shares of SPY, and I'm trying to get 10 shares of QQQ, and then later I'm trying to go for like 10 shares of Neo, Tesla, Nvidia, AMD, PayPal, stuff, like all of this.
I love it. I like it.
It's kind of like what I'm doing right now.
No, that's
cool.
cool.
I mean, so far I haven't taken a loss. Like I think it's working, but I just like, yes, that's what I'm saying. Like yesterday I kind of got scared because like it opened up like really low.
Yeah.
So like I didn't know whether to close it or roll. Like I don't know what to do like that. Like
Yeah, that's
that
what
was like my first time that's happened to me.
I think you have to have that exit plan, right? Like even if all the technicals are showing one thing and the momentum is showing one thing, like, you know, like I don't know, whatever could happen. You know, we go to war with China or something like that, like something huge, something totally unexpected, some new variant comes, like, you know, we kind of have to, I think we have to have that plan for the unexpected, but I love that you're taking your profits and sticking them into the underlying. I think that's super awesome.
Yeah.
Like, especially after you've taken that $10,000 and then put $10,000 in the underlying and you feel like you're just playing with house money at that point, that's super cool. But I would just hate for you to see like, so wait, so you say, okay, so you're using the $8,000 collateral and then, or the $9,000 collateral, and then you keep 1,000 just in case. So
yeah, in case it goes against me.
Okay, so and then what's your scenario there? Like, what are you gonna do with that $1,000?
So like you said, like I never let my, so like let's say I put the put credit spread, and like I received 360, right?
Yep.
So I will never let it like double my money. So like let's say now I'm down 360.
Okay.
And then I'm down another 360. Like I would just exit out of there.
Okay. So you do have a stop loss in place, like at least mentally. So you're like,
mentally, yeah.
Okay, so double, you're out.
Yeah.
You're good to go then. Like I think that's solid. That's super solid. I think like nothing wrong with that. Like and that's like so key too. I really like the fact that you were down, and if you didn't hit your stop loss, like where you're at, I'm not down 200%. I'm not closing it out and let it ride out. I think that's the right way.
Yeah, cause like what was it, Friday? So I collected $440. I mean $450.
Yeah.
So but on Friday it opened up. I said I was minus 630, right? So I was like, should I just wait for the minus 400 and like what was it? Like what would it be like? Minus
520, right? Or 540? Was it a
540? Yeah, so minus
yeah,
like I
540?
would have like just like I would have just gotten out
Okay.
because that would have been like double. So
Yeah, perfect.
I would have taken out of my money. I would have taken out a loss of 450. Like
perfect. Yeah,
so
that's perfect,
what I'm
man.
I mean, so yeah, like it's. I think it's a good like so far. It's like I so far haven't like gotten to that point where I've like lost. Like this is my first month, so of doing put credit spread. So like so far, I think like it's working so far.
Yeah, so far so good. I mean, yeah, definitely take a look after 6 months, after a year. Like I've had solid like months, you know, and then it just takes like takes a little bit of a time to take a step back. But I think if you follow what you're doing, I mean, yeah, you'll be successful. I mean, there's people that's all they do. They basically, well, they play iron condors for those 1DTs, but I don't see any issue with any of it that you're doing. And then you're just sticking it in the underlying. You're not just like you're not just saying I'm playing with 9,000. Okay, now I'll play with 11,000, 12,000, 13,000, and putting.
Yeah, no, I always stick to like 10,000. I always like put 9,000 collateral and like the 1,000 like for like in case it wants to guess me.
And so you're doing let me see. I think what questions do we have over here? So you're doing weeklies. So how far out are you going to expiration? You're going.
I always do it Monday. Well, I don't do Monday. Like I don't trade Monday. I don't put anything. I always do like I put my trade on Tuesday, going to Wednesday, and then Thursday going to Friday. Okay,
so you play 1 day till expiration, and you do 8 points out of the money on your short strike.
Yeah. So it would be like 437 right here.
Yeah.
And then, you know, the bottom I put it right there, and then I just collect. So I do 90 contracts, and then, like for me to get filled right away, I always put the what is it, the ask, I think, and then I just collect the credit.
Yep. Take what you can get.
Yeah.
And then so you just do this like at the beginning of the day, like pretty religiously.
No. I do it like in like what is it, like 10 a.m. or like 10 a.m. through 1 p.m. Like that's when I open my.
Where are you at?
Chicago.
Oh, okay. So 10 a.m. How much after market open is that?
What is it, like an hour 30 or like 2 hours? I
don't know what time zone, because I'm Pacific Standard Time, so.
I think I'm Eastern. I'm not sure.
You're like, I don't know.
I don't really pay attention to that. Yeah, but like I never place them right away because sometimes I did that once, like when I was first starting, and like I was already down like more like double what I already got. So, but I still want that, but like I kind of learned not to do that.
Okay. So you wait about an hour and a half. Wait for whatever like volatility to shake out a little bit.
Yeah.
And then you put them on Tuesday for Wednesdays, Thursdays
and then
for
Thursdays
Fridays.
To Friday. Yeah.
Same amount, and then take your profits and shove them into equity.
Yeah.
I like it. I like it a lot. That's pretty solid.
I also had one more question.
Yeah.
Okay, so I see your videos, and like you put credit spreads on Tesla, but you put them like all the way down.
Yep, I do.
And like I've been trying to do that, like, cause I know like, so I don't know if you could go switch the.
Man, I feel like your browser is so much more snappier than mine, or maybe because I don't.
All right, so look, this is so like Tesla.
Yeah.
So like it's just been on an uptrend like since what is it like?
Yeah.
I don't even know, May or March. I'm not sure.
Uh-huh.
So like right here you could see the 50 EMA and then the 100-day SMA. So like, what is this? So 668. So like this like I would use the 100-day as support. So it's at 668.
So you do like 670s or 665s?
Yeah. So look, I just want to show you this because I think it's look. So I'll go down all the way down to 65 right here, and then 60.
Yep.
Then I'll do like 20 with my collateral. Probably like 15. I'm not sure, but like you collect that right in the week.
Yep.
Or like, how would you?
Oh, so you have them on October 1st. I'm usually most of them I'm opening like 4 to 6 weeks out.
Oh.
That's why I don't typically open up the same week or even 2 weeks out.
So you don't open like a weekly?
No. No.
Oh. Damn. I thought you opened them weekly. So, I mean, I think that would be like good, like decent money. Like,
yeah, for sure. And there's like so many different ways to do it. The only thing is, I've been through that huge drop, which would have screwed me. Like even, and I remember I think I was opening up some weeklies at that point when Tesla had that big drop. And I was picking up like $30 or $20 or something like super little, and then they went in the money, and then that's what changed me from doing them weekly or even just a couple weeks out, unless I see the right setup, to opening up 4 to 6 weeks out. I just know 4 to 6 weeks out, you're super safe. You still have the extrinsic value, like. Okay, so that looks super safe. And what is that one's I don't see this, like the 660s or whatever.
Yeah, 65.
I mean, it seems like it's crazy for Tesla to drop $100 in a week, but it's happened. So
yeah,
so that's where my reluctance to do that is now, and that was just like because I've been through that. That was slap my wrist, and I'm just gonna do better. And if I'm making smaller gains because of it, that's okay. I have months, weeks, years to trade. I don't need to make it all at once. And also, since I'm doing them those few weeks out, if we continue on the uptrend, then I can roll those over or roll them up too. I still have that option to collect more premium. I'm not stuck at my $50-$60, whatever I've collected out there, right? Like, so if I had opened them up 6 weeks ago and they're stuck down at 600, I could still roll those guys up for some more credit there. And that's what I do. I don't know whether it's wrong or right. I know technically it's correct. 4 to 6 weeks out is technically correct. It's more profitable, but I mean, if you were to do this kind of same thing, 20 of them, that's still quite a bit of collateral though too, to be down in a short order. So in that case, like, what do I do if I'm down, if it drops $100? Like, what do I do?
Yeah, you'd probably, yes.
I'd probably cry a little bit.
Yeah, so like, I can't really put 20 because that's like all my money. Like, I wouldn't really have anything to like cover my losses.
Yeah, I mean, in reality, the probability of it dropping down $110 is very, 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 very low. But it's still could happen. Still absolutely could happen. Like, what if China, like, something that could happen? Well, two things. What if China decides, screw Tesla, you guys are out of the country? Like, what that could do for the stock?
That's gonna dump.
What if something actually happens to Elon Musk? Like, something could. He flies all over the place. He could get in a plane crash. What's gonna happen to the stock? Like, these are things that could actually happen. Which, I mean, or just the overall market tanking. I think that could happen too. So
I also see that, like, I'm not sure if you used to do it, but you used to do a covered calls on Tesla, right?
Yeah, I have a couple of them. I have some 820s. I think I'm down on them like right now, but I have like next week 820s.
Yeah, I still don't think Tesla will go to 820. Wait, when's your expiration?
October 1st.
Yeah, I don't think it'll go 820.
I hope not. I hope not next week.
I mean, right now there's resistance on 780 for Tesla.
Yeah, I hope so. I would love to see it like just stay where it's at, bounce back down to 730.
Honestly, like, I think I've been trying to do it, like, because I think I saw your videos and I got the idea from it, like, just doing covered calls on Tesla. So like doing credit spreads now and like just like getting Tesla shares and just once I have 100, like I could just do covered calls like passively.
Yep. Why not?
And I was also watching a video on a different dude. Like he does covered calls, but like he lets them get in the money, so like he'll actually get assigned. But then like he could just do a covered put, and he would just get $1,000 the next day, and if it gets assigned, I mean the next week, and then if it gets assigned, he could just do another covered call, like just collect premium, like
just doing the wheel using the wheel on Tesla. Yeah, I think it's pretty viable. My and the only reason I don't do that, I don't want my shares called away and then a rip up to where it never comes back down. Since
that's also a downside
and
of that.
It's that's like it's super hard to sell calls on underlyings that you actually like Tesla is something I want to own regardless of the price. If it goes down to $400, I would still love to own it. If it's up to $3,000, I still love owning it. Same thing with Palantir, and that's the hardest part about selling covered calls on stuff you love.
Didn't Kathy make a price prediction of like 3,000 or something like that?
What's that?
Didn't Kathy Woods make like a $3,000 Tesla strike?
Yeah, I think that's 20. I can't remember 2023 or 2025. Yeah, 3,000.
Yeah, I mean it's a good company to own.
It'll happen. I mean they're growing 50% year over year. Like
they're the leaders of EVs too, so
100%. And California just made, what is it? Was it by 2030?
To have like more electric vehicles, something like that?
No. Autonomous electric vehicles are mandatory. I'm pretty sure that's what it was.
I didn't even see that.
Yeah. Let's see if I got any more questions here. Let's see. Always good to have time on your hands when doing spreads. Allows you to still take profits early or roll if needed in bad scenarios. I've had SPY go good till one day before, and it takes a massive dump. I have two. I've definitely had like that's also just kind of like the matter of experience. Like we've all had plays that are looking good. We could have closed them for $3, and then like the last day or 2 days before, it moves super against you. I feel like debit spreads are almost less stressful to play because you don't need extra collateral to close out. Yeah, and they're very similar in nature. Like your profit, your risk to reward is almost exactly the same, really. But you'd have to do it with stocks that don't pay a dividend to avoid the dividend risk. Yeah, and that dividend risk only comes like when you're pretty close to the money. So, yeah. So 1 month. So 1 month of playing the SPY put credit spreads. Before that, what were you doing? Were you just kind of like?
I was just doing like covered calls on like AMD, Apple sometimes and stuff like that.
Just playing like kind of
so
the wheel.
Yeah, and I wasn't really getting like much premium. I was just getting like 50 or 100 a week, which is not that good.
Yeah, and then what made you fall into the SPY put credit spreads?
Well, I saw your videos, and then I think I saw like another video. I'm not sure, and then you were doing them on Tesla though. Yeah. But like I saw another video on someone doing them on SPY, so I started doing them. Like it's cheaper.
Very nice. Yeah, I think because you were kind of like asking about it, right? You were like, "Is this a good idea?"
Yeah.
Kind of thing. Yeah. Yeah.
Because I was putting 90 contracts, but I was like looking at videos and nobody was doing 90 contracts, so I'm like, "What am I doing? Like too many or something?" Like I don't know.
Am I doing? Yeah. Well, I think most people playing like that much money would probably go over to. Well, you have Ameritrade, like, and actually play the SPX instead.
I don't really have money on.
I know, but you can't.
I just use it for the grabs, like I don't really like trading views, so I kind of use just Peter Ameritrade for.
So when you start, or I guess as you continue to make a lot of money and taxes become a factor, look at the differences between the tax implications of playing the SPX versus the SPY, because there are some differences there. And I think that's why most people play the SPX. Like, especially when you're starting to, like, now you're doing it with 9-10 grand every single week. That's a lot of, that's going to end up to be quite a bit. And
taxes.
What's that?
For the taxes or?
On taxes, yeah.
Oh.
Yeah. Taxes are gonna come. You make money, the government wants some. They want a
Yeah.
lot.
Swear to God, the IRS.
IRS sucks.
I know. Just
Oh,
want to take your money.
yep. Someone's got to pay for the roads.
Yeah. All right. That was my question.
Cool. No, but I really like your strategy, and hope you, yeah, kind of keep updating us on that too. We should look at it
All
like in
right.
another month or two or something like that, because that's super cool.
Yeah.
I like that you have like your whole plan, like you've tried some different things, and then you have your closeout plan, and then you're not just, which I see a lot of people do, right? They start off with 9 grand and they're just like adding to it. Well, if I can do 9 grand, then I can do 18 grand in a few months and then just build up and build up and build up. But you're actually sticking to equity, which is what I do. And I think it's super smart because you can't, I mean, yeah, you can lose some money on some shares, but not like you could playing options for sure.
Yeah.
So cool, man.
All right.
I'm glad this worked out.
Yep. Thank you.
All right.
All right. Peace.
All right. Glad that worked out. What did we miss out? Let's see. But you'd have to do it with stocks that don't pay dividends to avoid the dividend risk. I totally get the feeling that Stone has when you don't see someone doing what you're doing and you're like doing something wrong. Yeah, right? Like nobody else is doing this. Why aren't people doing this? This is so obvious. This is easy money. I mean, that's how I feel. That's how I felt like just amongst my friends and coworkers where I'm like um where I was like, you guys should just trade because trading's pretty damn easy, and you can make a lot of money. But nobody wanted to talk about it, so that's why I'm here talking with you guys now. Yeah, but thanks for sharing that, Raul, because that's gonna be super cool. Oh gosh. Uh, let's see. Oh, better take this. This is the girlfriend. Hi, honey. The shocking news? Yep. Yep. Oh no. From what? Well, no, can't die from the hospital. I did. Like what? From what? Oh, really? Okay. Yeah, so nobody close to me or anything. So, but one of my girlfriend's customers. So my girlfriend does. She has a salon, and she's had her like customers for like 20 plus years. Some of them like 25 years that she's known. So one of the people she knew just passed away like at 61 years old of a heart attack, and yeah, I didn't really know who it is, but she just needed to vent for a minute because like she's known all of her people for at least like 10 years that she's been with. So sucks, but always like I don't know. I always feel like always a good reminder to put priorities in place, put perspective on things. Life doesn't last forever, and yeah. So let's see. I think I may go run down there though. We've been doing this for an hour. Thank you so much, Raul Stone, for coming on. That was super cool. Maybe I'll stick some money aside. We only have $2,700 buying power. Maybe we'll try that out with you. But I like all that. Let's see. Stone's in good hands already. Has $27,000 account. Yeah. I with that solid strategy. Oh my God! Next year that'll be $100K account. I've really been debating on switching to just put credit spreads. Seems like the smartest, safest option strategy. I mean, leaps are good. They're all good. That's a problem. It sucks like when you start learning about like just trading in general, and then you start watching videos on different companies and stuff. It's like I just want to buy them all. I just want to buy them all. It's hard not to do them all. But as long as you found the one you love and you're profitable on it, keep going at it. Let's see. Vertical spreads and leaps are the way. That's what I like. And underlying. I just like also owning the companies too that I like. But there are very, very, very few companies that I actually really like. Only a few. How do you recommend someone start learning spreads? Paper trading? Paper trading is great. Depends like how much money you have too. Like for me, I started off with cash just because I feel like you learn a lot more by having your money at risk. Like do a few paper trading if you just don't understand what's going to happen. Spreads are very simple in nature, I think. They're very easy to understand. They're very easy to manage. You kind of know what's going to happen with them. But putting real money at risk, it gives you a different perspective. It's like the difference in actually taking a loss and actually having diamond hands through your account showing down that you're $20,000-$30,000. Like paper trading's never going to give you that emotional feeling like real money is. So if you have a decent amount of money, just start small. Play one or two. Like on the SPY, you can play dollar wide. They're $100. So it's not like a ton of money. I mean, I know that's $100 is $100 is a lot of money, but in the scheme of things, and if you stick with it, and the amount of money that you'll make in the stock market, if you stick with it, not just take a loss and then say screw it and I quit, that won't be a lot, and it's a lot cheaper than education. It's probably $100 is probably cheaper than courses that people are freaking pushing that are garbage. So yeah. I don't have a couple leaps, but I've been burned with selling short calls against when it runs up. Yeah, so as long as you're selling, like, you can sell the calls, roll them out, but if you make sure you're selling the calls, like, either at a 15-20 delta to be safe, or above, where if you happen to get it exercised on you, then you're really not at any risk. And you can roll it all the way out until your leap's expiration, turn it into a debit spread, and guarantee you'd be profitable at that point. The emotions with trading has definitely been my biggest enemy. I think I've gotten way better than 4 months ago. Yeah, the emotion thing, it's amazing. It's such a that's like the biggest unknown cost, or the biggest like untalked about cost of trading, is the emotional trading, because it definitely can become very emotional. I mean, like when I started, I remember being emotional over like $10 or $15 and be so excited, like I made $20, like it's the best day ever. And then after you go through a few losses, and then you kind of get all you're doing, I feel like, with experience, is you're like just zooming out, seeing the bigger picture. And then you get more parts and pieces, and you just understand more. So then the pullbacks, all they look like is opportunity. That is it. They don't look like losses. They don't look like the end of the world. They just look like opportunity. And that's eventually what you'll see long term. Oh. Yeah, zooming out is a good word for it. Yeah. Well, literally zooming out. So like when I'll have a bad day, I'll literally zoom out on my account. Now I got the stupid crypto in there, so I get these, not stupid, but these lines. But like where I have from 213,000 down to whatever. Down to, let's see, down to 190. But then I can zoom out, literally, and see where I'm at. Now, okay, that's like a little bit of a blip. And if you know you're going to be over here, then this dip doesn't matter, this dip doesn't matter, this dip doesn't matter, this dip doesn't matter. And it's actually, I think, exactly what we're doing. I want to try Tastyworks. I just want to learn how to do options with them. Tastyworks is pretty easy. I think it's way easier than, at least their mobile platform is way better than TD Ameritrade's. But they're pretty good, and they have a lot of cool features on there. So, but anyways, guys, thank you guys for all showing up. I'm gonna go head down to my girlfriend's shop, make sure everything's all cool. Since she's just like a couple minutes away. Well, the spread works in a bear market too. Yeah, I mean, you can play call, you can play put, and you can play far enough out of the money to where they don't hurt you. Yeah, I gotta go, but if you want to address that more, we can look at it in the bear market. And actually, we'll just take a look at these, like this $10,000 winner right here. Wait, nope, can't see it. I'll scroll up. This $10,000 winner, this was from when Tesla was dropping like hail, like crazy. So if we would look at like Tesla as its kind of individual thing, we'll go a year. So like those were from over here when it was dropping, and literally from January to May, January, February, March, April, May, like 5 months of drop. That's that $10,000 winner. So you're very welcome. Thanks for showing up. Thank you, Raul. Let's see, but it's crazy you can learn to do such amazing skill like this for free. It is amazing. It's freaking amazing. All the tools, all the education, everything is free. Yeah, it's nuts. It's absolutely freaking nuts. Y'all have a good weekend. All right, I'm gonna go ahead and close this guy out now. Love you guys. Have a great rest of your weekend, and we'll see you Monday.